Developers are moving aggressively to secure early mover advantage along the Yamuna Expressway. One of the most highly anticipated entrants is Gaur Alaris. This artist's impression shows the physical scale of the development. The builder is utilizing an 11.8-acre site to construct 8 towers, each rising 34 stories. The master plan relies on flowing, peacock-inspired geometry for the open spaces, paired with vertical Art Deco architectural lines on the towers themselves to signal a premium position. The project has received official regulatory clearance, registered under RERA with the ID UPR-ERA PRJ 950965/07/2026. This creates a specific tension for buyers. You are being pitched a finished resort-style luxury ecosystem, but it is located in a macro environment that is largely still under construction. This map shows exactly where that construction is happening. Zooming in from the 165-kilometer Yamuna Expressway, we drop our pin right here in Sector 22D. This graphic outlines the industrial pipeline surrounding the site. 3,113 industrial parks have been allotted in the Noida region, covering sectors like electronics, medical devices, and apparel. To service that industrial density, the state is proposing heavy transit upgrades, including a regional rapid transit system corridor and an extension of the metro line directly through this node. All of this local infrastructure points toward the region's primary economic catalyst, the Noida International Airport. With commercial flight operations officially commencing, the developer has a validated timeline to point to when selling the region's future value. Buying here means trading immediate conveniences, like mature schools and established hospitals and local grocery markets, for a position in an infrastructure node still several years away from peak maturity. Inside the gates, Gaur Alaris is offering 2 distinct 3-bedroom configurations, a 1,550-square-foot layout and a larger 1,950-square-foot layout. This floor plan for the 1,550-square-foot unit reveals an efficient use of space. It fits 3 bedrooms, 2 toilets, and multiple connected balconies into a relatively compact footprint. However, that efficiency requires spatial sacrifices. The entry foyer is constrained, and there is no dedicated workspace or study room. Looking at the 1,950-square-foot plume layout, the spatial math changes. The extra 400 square feet buys a dedicated 8 by 9-foot study room near the entrance, an additional 3rd toilet, and expands the living and dining area to a generous 11 by 19 feet. Both layouts utilize an architectural strategy that pushes the service shafts to the exterior of the building. This keeps the internal rooms rectangular and easier to furnish. Keeping the internal walls clean means running external plumbing. The builder must execute the facade flawlessly to maintain the promised Art Deco aesthetic. This site plan illustrates how the developer plans to compensate for the currently underdeveloped Sector 22D by building a self-sustaining luxury ecosystem inside the perimeter. The internal programming includes a wellness zone equipped with a heated pool, ice baths, and a spa lounge. This is paired with a social zone featuring a banquet hall, business center, and dual landscapes weaving through the center of the towers. Accessing this ecosystem requires a mandatory financial commitment, a club membership fee priced at 4,045,000 rupees. You are securing a resort-like lifestyle, but you are also locking yourself into high, unavoidable ongoing holding costs, regardless of how often you actually use the facilities. The project is heavily marketed with a base sales price of 8,499 rupees per square foot, which appears competitive for the Yamuna Expressway corridor. This price list breaks down the mandatory additional charges. Buyers must immediately factor in 7 lakhs for car parking, plus infrastructure and power backup charges. Look closely at the fine print. An ECPA charge is calculated at an additional 3,999 rupees per square foot. Buyers must also navigate preferential location charges based on height. Taking a top floor avoids the 750 rupee per square foot PLC, but residents trade that savings for longer elevator wait times in a 34-story tower. This waterfall chart shows how the true landed cost is calculated. When you stack the parking, the club fee, infrastructure charges, PLCs, and that 3,999 rupee ECPA allocation on top of the base rate, the final figure is substantially higher. This price gap dictates the required return on investment for anyone evaluating this purely as a financial asset. This quadrant chart maps the final buying decision. Your viability for Gaur Alaris depends on your capital capacity versus your required timeline. For a pure investor with a 5-year horizon or longer, the match is strong. You are planting capital ahead of the airport's full operational maturity and the completion of the local industrial parks. For an end-user family looking to move in immediately, the friction is high. The daily commute for premium schooling and specialized healthcare will be taxing in the short term. For non-resident Indians or high-net-worth individuals, it serves as a highly amenitized base, located just minutes from a major international aviation hub. Gaur Alaris disproportionately rewards patient capital and lifestyle buyers. It is not designed for families needing immediate urban conveniences outside their front gate. Before signing an agreement, 3 specific factors must be verified to ensure the commitment aligns with the contractual reality. First, demand explicit written clarity from the developer regarding the exact application and total sum of the 3,999 rupee per square foot ECPA charge. Do not rely on verbal estimates. Second, verify the exact development timeline for the blank future development areas shown on the master plan to understand the duration of ongoing construction noise and disruption. Finally, anchor your expectations strictly to the finalized RERA possession date of July 2026, rather than marketing estimates. Gaur Alaris is a high-conviction bet on the Yamuna Expressway's future. It requires both patience and a premium capital outlay to realize the project's long-term location and design premiums.